Okay, today is March 4th, 2014. I got quite a few stuff to cover today, so I'm probably gonna, go through it fairly quickly. First of all, I'm gonna cover the market indexes, and then we cover some of the stock that I was kind of tweeting it out, and also kind of highlighted in the weekend video and some of the blog posting. So let's get going and start off with S&P 500. First of all, as like I said, when we get to a event or instances in time where there is certain thing that it is so obvious, and we sort of know what most likely gonna happen, then we have to remind ourselves that the market behaves differently. Okay? If it's obvious, it's not going to happen. So that's why I always say expect the unexpected. So it's just like over the weekend with the Russian, the Russia and the Ukraine type of conflict. Everybody is looking at the future. Overnight future is so down and that kind of stuff. They're basically looking for this market to crash, right? So on Monday when the market opened, and yeah, it went down, but hell, it didn't go positive, but it didn't go all the way down to like 350 or 500 point on the Dow and that sort of thing. And, because everybody was expecting that. And then, but the unexpected is for the market to come back up and resume its uptrend, right? And exactly that's what happened today. Now, a lot of people are saying that, oh, there's low volume and that kind of stuff. Well, let me ask you this question. When is the last time that you put in the order to say, sell IBM 150, or no, sell IBM when it's 1.5 million share, okay? Right? We always quote with price, right? Sell IBM 156 and a quarter, right? Or something like that, okay? So yeah, volume is important, but put it in context. You hear a lot of these people talk about, oh, this value, is a shortcoming. All these guys that because they missed it, right? They are justifying that, that they missed it for the right reason. So come on, these guys are going to be the chaser. Who cares? The market been running for the last year and a half, 2 years, with low volume. And where is it now? Right? We're record high. So just trade price. That's basically what we should focus. All right, the volume will take care of itself. Because if you do a cumulative, look at OBV or accumulation volume, that kind of stuff, you will see that the volume been trending higher and higher. Okay, the cumulative volume. I mean, this buying, sucking up all the shares. Right. It's not like they are distribution, throwing it out that the trend of those accumulation is on the downtrend, right? So that's what matters because if we got 5 day, it's up a million share a day. That's 5 million, and then 2 day on a sell that is sell 2 million a day. So we got 4 million that we sold out, but we still net 1 million on the plus side, right? So that's what we want to watch. Okay. So anyway, let's take a look at the market indicators, the index. On the S&P 500, you see that it's coming up. It held that 1850 level, that 1850, 1852, somewhere around there. Right now, we're basically looking at, all-time high, and we are essentially looking at sometime, somewhere up at that 1900 level. Right now, people might be, still a lot of disbelief, disbeliever out there, non-believers that say, this market is crazy. It's not going to go that high. But hey, we've been saying that since what 2009, right? So, and here's the Dow Jones 30, a little bit lagging. That's why we got to see the Dow Jones 30 will come up and put in a new high. Okay? Now, when they're going to do that, I don't think anybody know. At least I don't know. How it's going to do that? Is it going to dip down here and then come back up, or is it just going to straight up? Nobody know. At least I don't know. Right? Somebody say they know. Well, go listen to them. You'd be a waste of your time. I wouldn't be listening to them. So, and here's the Nasdaq 100. Okay, okay. And again, we basically put in a new high. Okay? And who would have thought that the Nasdaq is getting pretty darn close to the .com 2000. Was that you know Y2K, right? Type of, right? So been quite a while, 2000. I mean, it's only 14 years, right? 13 years or so. But, hey, a lot of things happen. So essentially looking at somewhere around 3,800 if we come up to this 127 extension, right? Just using the Fibonacci retracement. Okay. It's not saying that it will get there. It's just that we put in some numbers, so at least there's some target out there because you got people that's trading these Fibonacci retracement, and they look at these things. So we kind of get some idea what are some of the other traders thinking or looking at, right? And that's basically that's what I use these tools for. Not saying that I'm gonna buy it and when it get up there I'm gonna sell or something like that. Okay. Here's a Russell 2000. Right, again, look at this new high. Remember when it was down here, everybody talking about, oh man, the small cap is not participating in this rally. You know, oh, hey, this is a fake thing. You know, this rally can't hold. Well, look at this right now. Right? And now people are saying that, oh, this thing is like in a bubble, it's blowing off. It probably go straight up, get in a parabolic, and then go climatic top here. You know, that kind of stuff. Where are those guys when it was down here? Anyway, let's take a look at some of the stock. Morgan Stanley, we're talking about Morgan Stanley here, right? There's a lot of stock actually, after yesterday, little pullback and put in a lot of these little hammer type of candle, right? And it's just tough to, it's just tough to try to get in on a day that when it just kind of gapped out, gap up there, right? And let me zoom this in, right? So I kind of tweak that out. You see, we're basically looking at this particular, these level here when it break through these level. Right, so it's kind of closed that on Friday, and on Monday, we're looking at it anywhere that kind of come up and take out this high or something like that, or we see a rally, then we're going to get in. Okay, so but yesterday it kind of gapped down, so put in a little bit of a spinning top type of a candle down here, and then when today it just gapped up, and I usually don't want to chase these gap, so I was after it come up here, and kind of waiting for a pullback. Not much of a pullback at all. So maybe it will come in the next couple of days. That maybe a lot of times you see a little breakout and then come back and then come back up here. Right, kind of consolidate and then go. All right. So the target number is that up here. This is the target level that we're shooting at. Okay, so and that's basically what I'm looking at right now on Morgan Stanley. So was trying to get in today, but I didn't get in. So I'm just going to wait, and if I miss it, I miss it. I wait for the next price trigger, because you don't have to take every trade, right? And that's basically what I'm telling myself to, because there's tremendous amount of opportunity in the market, So I tell people that, opportunity is infinite in the market, but the capital is limited. Right? So just because we miss a trade or the trade doesn't feel right, don't go after that trade. Right? Wait for the one, with your star all lined up and everything. Then go in. Right? Because you have to believe. Whatever you do, you have to believe. Right? If you don't believe, then you're basically going in with lack of conviction. Then you keep on doubting yourself along. And then when you doubt yourself, you don't make good decisions. Okay? So. And there's more trade come along. So if I miss this one, get up here. Hey, who know, right? When it get up here, and it could do this, right? Then I get in and then play the next wave up. Right? So it's Goldman Sachs. I see Goldman Sachs. We're talking about, breaking up of this level, but also you notice that. Well, I was also talking about this inside candle here too. So you could see that it's kind of close and. Close about that inside candle, but then the following day, it kind of didn't get above that close, but also closed down and so forth. So right here we got another close, right? But it have no follow through. Okay? So then right now we're basically looking for a little bit of follow through and then come up here. That's also another kind of another candle here. So you can see that tomorrow, essentially, if the price went from here, let's say after yesterday's close down here, and then if it, it kind of come up here like this, right? Then I would have bought, somewhere around here. But when it gap up like this, I don't want to buy the gap and then get it to fade down throughout the day, and then possibly close back below this trigger level. right? And that's the reason, one of the reasons why I don't like to chase gap, because there's some that degree of unpredictability, right, or that uncertainty. Well, the uncertainty might not be the right word because there's always uncertainty in the market. Okay? Okay. So tomorrow we'll see how the price action is, and you know, I'm not really in particularly interested in getting in trading Goldman Sachs anyway. So, but kind of look at that, and I might go and get some Morgan Stanley if it presents itself. But then also B of A. And we're talking about B of A. I actually got in on B of A, but before I tell you about my position on B of A, let's take a look at here. Essentially, you see that it came down here, got a little bit of a doji spinning top type of candle come up. So basically forming this descending triangle or a little bit of a wedge. You see all these little doji, right? These doji candle, and you see these leg, the wick, right? It's kind of getting a little bit of a higher high level, right? I mean higher low level, okay? So it's also coming up on this wedge here, this trend line. And essentially, I was looking at somewhere around this 1665, somewhere around there, basically, okay? Essentially breaking above this trend line here, right? And again, this thing was running, right? So I was kind of waiting and waiting. And then near the close, I actually went and, bought a partial position, okay? Then we'll see what happened tomorrow. Then put in if it's, looks good, price action is positive, then I go and put on the rest of the position. Otherwise, if it run off, then fine. I just wait for the next pullback up here, and then add. Right? Or if it come back down, pull back, and I look for a retrigger, then I go in. So it kind of help mitigate some of the risks. Right? Of course, you pay a price for that because you might get the possibility that you forfeit some of the potential profit. But nothing is free in this world, right? Okay. You can't have to, kick and eat it. Well, we could, but not all the time. Okay. And here's Micron, right? Micron, we're looking at Micron also. This thing is strong. I mean, as far as the semiconductor stock is concerned. And I was basically looking at maybe a possibly, like this, maybe getting a little bit of an inside ball or something like that. I was waiting for something, to do this. But today it kind of gapped up, gap out on the gap up on the open, and then pulled back, real quickly, and then just went. So I'm gonna try to see, can I get? I have a feeling that it might go this way, tomorrow. Maybe it's just gonna go a continuation on the upside. Right? Then I probably have to wait for it to pull back here like this before I could get in, or just have to look at some consolidation here to see how you're going to get in on here. Because essentially, here's the first target. Because even though if I, put a maybe a stop somewhere around here, so this level here is pretty much over 1R. Then if I get up here, pretty much I could move my stop to sort of a break even or close to a break even, so you kind of lessen the potential loss if the if the trade start going against me. Then if it continue to go, then essentially we could take a look at that, possibly getting it back up to this channel here, or at least up in the 27, 28 level. And so those are the kind of stuff that we want to play. And if for those people that want to use the Fibonacci retracement, we could also use that to kind of get a little bit of a gauge of where it might be. So here's 127, it's 26 and a half, 141, 27, and 2760 at 168, 161. All right, see that price come up here and it kind of retrace down to the 382, which is where this trend line is also, and then just kind of snap right to this retracement zone. I call these retracement zone here, the 618.50 and the 382. So right now it's bumping up at that 78.6 level. Right? So essentially, it's wouldn't be surprised, in the next couple of days, Micron be testing this high up here. Right? So a couple other stock, HIMX, it's the semiconductor, another semiconductor So we're kind of looking at a breakout right here. Essentially this little wedge, this trend line here. At least we want to play it up here. This is about 1525. So right here is about 1430. So, and one of the tricks that I use to kind of get a gauge of how many are or potential, if I use the Fibonacci, and that's why you see that a lot of time I also set my Fibonacci with the 200, 300, 400. So basically, this is one R, the risk, right? Then I just measure based on a multiple of 100. That would give me, the number of R of return that I might get. So right now, if we get it up here somewhere around 1430, if you get up to this level here, that's pretty close to, 1 to 1, on a risk and reward ratio. So if you could get something tighter than that, so it all depends how much of a risk that you want to take. So, and the other one is BlackBerry. BlackBerry is kind of interesting. You see, here's the level here, potential near-term resistance somewhere around 1086, 1090 area. Okay, and you can see this could be like a little bit of a bull flag, or if you look at it, you could also make a case to say, yeah, I got a little bit of a cup in the handle, right? Okay, then you could do a major move based on these guys. But then again, essentially you want to play it up to, this level here. Whoops, I always get messed up here. Okay, I think I'm loading data here. So basically looking at, this this level up here, somewhere around the 1154. If we play this little bit of a setup here to come up, and you can see that got a little bit of a inverted hammer here. It made it up here and then kind of sold off. So it kind of closed at near the low. So we might get a little bit of a pullback tomorrow, but you never know. But essentially, we want to see it to come up to this, 1084. And it might be good if we just kind of consolidate here for a little bit, but I do have a position on it. I mean, for those that doesn't have a position, I want to look for, a trigger or setup to get into a position, on the long side. Is that it would be good if, here's the level that we want to see it break. So I want to see maybe consolidate here and then break out here, right? So that way it doesn't spend all the energy, right? Like coming from here and then try to break out. Because when you do that, there might not be enough sustaining power when it breaks through. Then, because some of these guys that bought up here and if make a move up here, they'd be taking a lot of profit. So depending on how many of these people actually push this thing up, or how many people actually bought after it breakthrough, right? So you got more people in there that's willing to take profit and then sell it down, then you got this pullback. That's why a lot of times you see these kind of fake out, right? So because it's all depend on how much of the energy or buying power is already spent to push the price up here, right? Okay, so if we see this and consolidate here, that means we don't spend too much, right? We're just kind of attracting, building up that energy, right, to get the, lining up those buyer, and then we push it up. Okay, then there's a good chance that we could, break through on this level, right? So, because it takes a lot of energy to get up here, right? And we're going to squeeze a lot of short here too. JC Penney, right? Look at JC Penney. And here's that trend line. There's a trend line here. Let me, whoops. Let me just pull the weekly here. This is the trend line, okay? All right. So on the daily chart here, and we're talking about filling this gap, right? So it got this gap fill, right, today on a gap up. And I wouldn't be surprised that, today I actually got into this this trend line here, and I said, it could be a little bit of a pose a little bit of a resistance before we could, get up to this level here. We need to clear this. So I wouldn't be surprised that I get a little pullback and try to test and maybe fill this gap here before it make a surge, make a push to get up here, which might be good also. Then we don't have to, worry about, getting coming down from up this level, sell off and fill this gap. Okay. Yeah. Because now the other thing is if it come down, fill this gap, and if we dip down here and then try to fill this gap, then this thing is in trouble, Right? I mean, the market lost confidence, right? Because this right here is that earning gap that we're talking about, and essentially the market got renewed confidence that JCPenney is not going to go bankrupt, right? Talk about the working capital, the credit, the line of credit is all set. They got over $2 billion. They don't have to go and sell more asset and that sort of thing. And then today, S&P kind of upgraded their credit outlook or something, on JCPenney to stable or something, right? Supposed to be an upgrade. So definitely things are looking up for JCPenney. So it's a matter of execution now for them to execute the turnaround plan. So definitely keep an eye on that. I don't have a position on this. So and the one that we've been watching for quite a while is AMD, and I think AMD is getting ready to break one way or the other. Either it's come down or go back up. Remember that Intel chart that I put up this weekend? If you don't, go to the blog, go to my blog and check it out. Is that either going to break up or it's going to break down. If it's going to break down, then it's going to come down here and then form this maybe a little, just like the one that I put down for Intel. It's going to break this, big head and shoulder. So it's all depends what you believe is. Do you believe that it's going to go up? Oops, you know, right? Or do you believe that it's going to go down? Right? Based on this right here, I'm betting on going up. I could be wrong. Right? So I'm looking at 375, 377. If we break those levels, then we probably come up and fill this gap and then work itself up and maybe get to, testing this 470 again. And maybe this time around, we might be able to clear it. Right? So if we clear this, then we're basically talking about getting up to the 6 and possibly, to the 8 level. All right? Okay, so these are turnaround play. You don't go and trade them. If you want to trade some stock, you want to trade some high beta stock. Okay? And the other one we want to look at is Yahoo. Right? Okay, talk about Yahoo a while. I think it was a week ago when I first talked about Yahoo, and I was talking about this trend line coming down. I remember I also, always look for this little zigzag, right? These type of trend, essentially, higher low, and then higher high. So when you break this pivot, I mean, you could, even if it come down, you could assure yourself that you're going to get a higher high on this pattern. Right? So right now, we're essentially looking at the, Google, I mean, Yahoo is broken to here. And right now, it's basically, we just want to see a follow to. And you might want to, if you don't have a position, then you want to see, some of the price action in here and try to get in. I do have a position set up already on Yahoo, okay? Because there's a lot of possibility. Right? One, you could came in here, because basically off of these, trend line, and you got this little inside candle here, these inside candle, and so you could play the break of this candle. Now, I'm not that smart, so I won't be able to buy at this bottom here. Yeah, that's why I always say, I buy high and then sell higher. So I won't even try to get out, try to outguess people and then try to get it down here. Right? So I'm wait for the confirmation. When it pulls to, then it looks good, then I buy. Right? So that means, it's not always, it's the right way to do it or the wrong way to do it. It's whatever makes you comfortable. Right? Because it's about confidence and conviction. Okay? So it's about your money too. Right? So don't let people tell you or talk you into how to trade, or what to trade. Because I tell people I could do a pretty damn good job of losing my money already, so I don't need you to teach me how to lose money. So then here's HP. Oh, by the way, yeah, Yahoo, what am I looking at? Target up here, somewhere around 41. I want to play it up to here. Then once you get up here, you will hear a lot of people talking about breaking out and that sort of thing. Well, if they could break it out for me, that's great. I'd be carrying the position too. If it's not, I'd be scaling out some profit there, right? So that's what you want to do. So when you set it up on these, like I said, play the breakout out of these pullback. That's where you want to do it. So when these things come up to these baseline, resistant breakout, then you have a greater chance of taking profit or participating in that breakout, and you don't have to worry about at too much of a risk of the possibility or the potential of a fake out, right? Because you'd be scaling out your position, and if it's a fake out coming, you just exit your position with some profit. And here's HP. Again, HP, we're basically talking about a long-term, a little bit of a long-term play, right? And basically looking at a turnaround on HP. You can see this, this long baseline here. Basically talking about breaking above that 30, and I believe it made that today. It broke up just about, a little bit over 30. It's got 30.12 here, somewhere around here. Well, on this right here, got a 30.13. So maybe nudge up another penny on the after hour. And essentially, it's this big trend line here we're playing. It's kind of bump up here. Then once we break this trend line, we'll be looking at all these levels here. Right? Maybe a possibility of talking about this particular level, right? And then work itself up. And the ultimate target is back to this 50 something, 56, 55 level here, right? Before where they screwed up buying that company, Palm OS and Autonomy and that kind of stuff, overpay, and just kind of got a little crazy on their business, So that's basically the stocks and the market for today. Hopefully you haven't been spooked out of the market, and you are not chasing after these stocks that have been going up. Just like I put out a little tweet that today's market is just like a little boy in a candy store. There's so many good candy to pick, and just like today, there's so many stock to pick. And the thing is, we can't buy them all, okay? And we don't have to trade every trigger. So be selective, and most importantly, have confidence and conviction on the trade that you take, so that way it doesn't cast any doubt on the decision-making process. So good luck.